financial crisis recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
So if you or anyone you know is in this situation, or you want to ensure that you never are, I have the knowledge and the information you're looking for. Go to CYA21.com and get my free download, Financial Crisis Bible, or call us at 763-559-3800.
If you've got debt problems and thinking about bankruptcy, you're going to need a good lawyer, one that will fight for your rights and get you the relief you need. David Kingsbury of the Kingsbury Law Office was one of the first attorneys in Minnesota to devote his practice exclusively to bankruptcy, and he's been handling small business as well as personal Chapter 7 and 13 bankruptcy cases for over 21 years. You'll get quality representation at a reasonable cost. You'll get immediate assistance and personal attention addressing your needs and concerns. If you've got problems with creditors harassing you at work or home, have pressing problems such as mortgage foreclosure, wage garnishment, lawsuits, medical bills, or other bills you just can't pay, call Dave Kingsbury to eliminate or reduce your debt. Professional, friendly, and non-judgmental. Payment plans available. Call 952-432-4388 or visit bankruptcylawofficemn.com. The Kingsbury Law Office is a federally designated debt relief agency and helps people file bankruptcy under the Bankruptcy Code.
Don't let retirement happen to you. You make retirement happen. A lot of people feel that their retirement plans are running them. What if you could have more control, even be in charge? Hi, I'm Todd Grill. Let me show you how you can self-direct your retirement instead of being directed a certain way. Let's find your choice for your future.
Contact Todd Grill at Nexus Direct IRA, 763-559-5363, or go to nexusdirectira.com. Whether you're studying for your real estate license or trying to maintain it, trust Kaplan Real Estate Education. Kaplan has been the proven leader in Minnesota professional education for more than 30 years. They'll help you fulfill the state continuing education requirements with exciting courses from expert instructors like Todd Rooker. With convenient locations in the metro area, you'll easily meet the requirements to renew your real estate license by the June 30th deadline. Kaplan builds futures one success story at a time. Visit kpsminnesota.com or call 888-523-1080.
You're listening to Cover Your Assets with Todd Rooker.
All right, we're back with Mike Overson, Waterstone Mortgage, talking about how to position yourself for future financing. Mike was bringing up the forgive me, the lack of understanding with sophisticated borrowers, folks who want to get financing. Maybe intelligent people, maybe financially successful, but have no clue as to how the underwriting guidelines work, and maybe more importantly, how dramatically they've changed, especially for self-employed borrowers. So, Mike, you brought something up that I thought was just fantastic. Tell me again exactly what you said at the break.
Yeah, so we were kind of comparing, what it takes to get a loan, or the two types of people out there. I'm not saying there's only two types of people, but just comparing two people. So if I have a client that comes to me and they have $500,000 worth of assets, $50,000 in checking and savings, $450,000 in IRAs and other investment accounts and things like that, and they got 800 credit scores, but they just don't show any income on paper, it's very, very tough for me to get them a loan.
As compared with somebody who makes $17 an hour, who's a W-2 wage earner, everything is transparent. You can show all of the income. They only need 3.5% down. That person's easier to get a loan for than the person with the net worth of a $500,000 or $1 million. Isn't it?
And that person might have a 645 credit score, $17 an hour. I can get that person a loan all day long with FHA, but this person over here who's got the 800 credit score with all the assets in the world, they could buy their house in cash if they wanted to, maybe twice over. Can't get them a loan.
And the thing is, when you tell somebody like that, who considers themselves obviously financially savvy, they're incensed by the fact that you say this. They're offended by it.
Yeah.
And the idea that they can't get a loan because they think it's a formality. Look, you understand, I got $50K in my checking account, and I mean, I could buy this house in cash. That means nothing. you have to show capacity to make payments on the loan. When I went to buy my first house, I was shocked. And this is years ago during a time that the underwriting guidelines, likewise, now remember, I'm old, I'm over 50. Likewise, the underwriting guidelines were tight in the old days. So my grandfather, who had literally $2 million, at least $1 million in farmland, was willing to co-sign on a home loan for me. But my grandfather showed very little income. He was retired. He didn't have much of an income. Well, guess what? His co-signing did nothing for me. And they wouldn't give him the loan either because they said he has no capacity to make payments on the loan. That was the first time I was confronted with that. I think I was maybe 24 years old at the time. And I learned exactly what you're saying. But a lot of mortgage programs after that time began to evolve. And for self-employed borrowers, remember the stated income loans. They were developed for these people. I mean, most business owners, Mike, the whole goal is to show that you make no money so you pay no taxes.
Right.
Right? Of course, it doesn't work very well when you go to show transparency. And transparency means tracking mechanisms to show and verify income, expenses, assets, everything you've got. When you don't have transparency to show that income, and because you've been trying to avoid that to minimize taxation as a self-employed person, good luck getting a loan in today's scrutinized underwriting environment.
Right, exactly. And the whole thing with the two biggest things in the mortgage world right now is income verification and asset verification. If you got a ton of assets, you can verify it, great. Easy hurdle to get over, not a problem. Income verification, that's the biggest one for self-employed borrowers. What some people have to do if you want to qualify is we have to show that you're going to start liquidating your retirement accounts on a monthly basis, and whatever that amount is, you have to actually prove that you've taken draws and you've started that process and you've actually received that monthly income that you would be receiving on the retirement accounts. And then we have to show that you have enough in those accounts to have that income continue for at least 3 years. Really?
Meaning that you've got to show that it is a sustainable payment that you can make now and in the future.
Right. And a lot of people might not be at that position yet where it's like, well, I don't want to start liquidating retirement accounts and taking that monthly income in. That's not part of my overall financial plan. Sometimes that's the only way to get it done. And it still doesn't make sense because, their argument is, I got $500,000 over here. Like, I got an 800 credit score. How am I not a good borrower?
Absolutely. And look, if we go back prior to 2007, 2006, the self-employed borrower, if they came to somebody like you, Mike, and you turned them down for financing, their answer to that would be, I'll just find somebody who tells me what I want to hear, and I'll just go from broker to broker to broker because inevitably I'll be able to find somebody who gives me financing.
Right.
Those days are gone, guys. You just need to know that is absolute nonsense. It doesn't work anymore. I'm aware that there were guidelines that would allow you to do stated income loans for a self-employed borrower. Those programs don't exist. You don't have the ability to do that, and you can't state what you make. You have to show it in a highly transparent and documented way. And if in your business, you're not accustomed to doing that. And during this period of time, you're watching the world go sideways, and you've remained strong and stable. So you really don't understand what all the hoopla is about all of these people losing their homes. To you, it's just a bunch of goofy people who haven't managed their money well, and you have no clue what's going on. But you assume that the situation in terms of environment for getting financing for you being solid and stable, never missed a payment in your entire life, hasn't changed because you're different than those people. You go in to get financing and you find out that the entire game has changed, and going from one person to the next is going to do nothing but decrease your credit score as you go. And the reality is that you've got to find a way. If I need a $500,000 loan, I need to know that the last 24 months, as an average of that last 24 months worth of income, based on a ratio of, let's say, 30 to 35%, shows that my income is high enough to be able to qualify me for that program regardless. And if I don't do that, I'm not going to refinance my house, and I'm buying a new house, right?
Exactly. And I have a lot of self-employed people that come to me and say, I'm planning on doing this in the next year. Here's my tax returns for the last 2 years. What do I have to do different, if anything, when I'm filing my next tax return to show that I make enough income to qualify? And a lot of times it's, we can add back in depreciation. That's just a paper loss, so that just gets thrown back into the pot. It's income that we can use. But a lot of times it's, hey, here's what you're going to have to show as a net after you add your depreciation back in. You're going to pay the taxes on that money. Now, remember that, but that's going to allow you to show enough income to qualify for what you want to qualify for. So here it is, and now it's your turn to make the decision if you want to pay those taxes, show that income, so you can qualify for the house or not.
Great point. And the more finagled your situation is, the tougher it is to get a loan through. And a perfect example of that would be that, look, you invested 5 years ago $200,000 of your own money into your business. Now your business is succeeding, but your CPA says, look, let's not take it as income because we'll be taxed as income. Let's take it as a loan to the company, and you're repaying the loan so you don't have to pay any taxes, and we don't have to take it as income. Well, that's great. You avoided paying tax on the money that you frankly were using as income to put food on your table and make your payments. Problem is, you can't use it as income because it isn't income. It's a loan repayment, which means an asset, not income. And now, if you want to get a loan, you have to document that. Now you need P&Ls. Now you need to have, profit and loss. You need to have a balance sheet. And now we get into the strength of your business. And oh my God, what a nightmare this is.
Yeah, I see that file just getting thicker and thicker and thicker, and it's sometimes it's such a documentation nightmare that you physically can't document it enough, and it's just not going to happen.
Well, not only that, let's get real. You got a W-2 income earner sitting right across the desk at you that you could close on in 7 days. And forgive me, but I need to make my mortgage payment too, and I got to get a commission coming in here because if I don't, I'm going to be in trouble. And which file do you think that individual is going to focus on? Really?
Right.
I mean,
yeah,
come on.
You make a good point. I mean, it's reality. And in today's world with so many less loan originators and rates being so low and all these buyers going out there because prices are low and now you can refinance at 3.25% on 30-year fixed. I mean, there's a lot of people that wait, and it's unfortunate. But sometimes I'll put in 60, 70 hours a week. I physically can't work enough to get to every single person out there. So I have loan officers underneath me, and I have my assistant, and we try to make it work and try to service everyone within a timely fashion. But yeah, it's a crazy mortgage world out there. So, I mean, you hear stories of people not getting called back for 2 weeks. I can actually see that. I can see why.
And then in addition to that, Mike, we both know that people stink at following directions. So when you tell them I need this, and this, and you're so busy, you can't get them back into the office for 2 weeks, and they show up with 3/4 of the information, 3/4 does not make a completed file. And submitting it to the underwriter is a complete waste of time because all it does is create more questions from the underwriter's perspective, which generally means more stipulations for more documentation, and it'll be a disaster of epic proportions.
Yeah.
And then you say, well, I can get you back in here 2 weeks from now when you do get me the documents I asked you for, because people are terrible at that, right?
Yeah, my list of docs that I send out to my people, I say right up front, I actually attach a link to a Forbes website, and Forbes had an article on there saying, if you don't get your documentation to your lender, you ain't closing.
That's
it. Don't fight them. Don't ask questions. You can ask questions why they need it, but don't say, well, I'm just not going to provide that.
And the consumer doesn't care. The consumer says, I just want a loan. I don't want to hear all of this stuff.
Yeah.
Well, listen, go play in your own sandbox then, because it isn't happening, you know? And this is why I wanted to do the show, because I don't think people fully appreciate what it means to sit on the other side of the table and have somebody show up with a paycheck and a driver's license and think they're going to get a loan. You know, they just don't get it. And it's tough.
Yep, it's tougher out there. And the whole thing is if you're thorough up front, so that I try to collect anything and everything I can think of on that file right up front. Give those people a week to gather it all, get it back to me, because that's going to save you weeks on the back end through underwriting. Because as soon as the underwriter gets a file, if there's not everything there, they're going to ask more questions. Like you said, you're going to have to provide more documentation. And if you paint that picture, a nice clear picture up front, goes right on through.
And then in addition to that, to have an experienced mortgage broker who knows that this is going to be a logical question the underwriter is going to bring up, even though it's not a requirement in the underwriting guidelines as we see it today, we know that underwriter is going to ask for that. Let's just get it now so we can get an approval right out of the chute rather than having somebody send me back information requests, and now we slow the whole process down. You lose your house, blah, blah, blah. So, hey, man, we're going to take our last break. Great information. We're going to talk more about this when we come back. We're going to talk about credit scoring, but how to position yourself for future financing. The end of the day is basically this. You need to see a mortgage broker. You need to know to say, where am I deficient in the underwriting process, or where could I improve my position to get a better rate, a better loan? And then while you're out looking for that home, you morph yourself into that. So when you walk back into the broker's office, you got everything you need and you got the best shot at the best rate and the best loan possible. and you've been positioning yourself all along. So with that, we're going to take our last break, and we will be back. This is Cover Your Assets. Also, remember to, if you want more information, download the Financial Crisis Bible. Explains all of this stuff. It's a free download, you guys. That is www.financialcrisisbible. You can download all that information. We'll be right back. If you or anyone you know are in a financially challenged situation, listen. My name is Todd Rooker. For over 20 years, I've been helping people strategically plan for and deal with a financial crisis. My typical client may have previously had a substantial net worth and are now in fear of losing their personal home. My clients will often say, in the past, I was financially successful. However, at this point, I'm exhausting all of my financial resources trying to make my payments on time. I feel as though I'm simply delaying the inevitable by throwing good money after bad. So my questions are, Todd, do I just let the bank liquidate my business? Do I need to consider things like foreclosure, short sale, deed in lieu, loan modification, credit counseling, or even bankruptcy? And then most importantly, how do I minimize the damage and rebuild my life when this disaster is over? This is my world, and I teach classes on those very topics. So if you or anyone you know is in this situation, or you want to ensure that you never are, I have the knowledge and the information you're looking for. Go to CYA21.com and get my free download, Financial Crisis Bible, or call us at 763-559-3800.
Paying taxes is one of the greatest certainties of life. Wouldn't it be nice to have a strategy that puts you and your business in the best possible position to preserve your income and assets? Make no mistake about it, finding the right strategic accounting partner is critical. Arlise Richardson LTD gives you the knowledge and expertise of a large corporate firm with the tailored service of a small personal firm. When it comes to discussing delicate financial matters and putting together a strategy and a plan that best meets your needs, the team at Arlise Richardson LTD is second to none. Every company and every individual has different accounting needs, so their approach to every client is unique. They work with all types of businesses, from corporations to independent contractors and nonprofits. Contact them today to find out how Arlise Richardson LTD can help with your specific business or personal accounting situation. Call 651-482-0122 for a free consultation. You can also find them online at accounting-offices.net. With Arlise Richardson LTD, one thing is certain: they approach your taxes strategically.
A lot of people probably don't want to think about attorney's fees, but what if they weren't just an expense? They were an investment. I'm Tom Fafinski with Virtus Law. If you own an interest in real estate or a business, we are your resource, especially in a down economy. Let Virtus Law help you experience a return on your investment in attorney's fees. Whether you're structuring, reorganizing, or planning ahead, visit us online at virtuslaw.com.
He wouldn't do well on the balance beam. Probably not with a shot put either. Boxing? Forget about it. But when it comes to covering the Olympics later this month, he's definitely gold medal material. Hear Jim Souhan's live updates from London.
One of the coolest things I think I've ever covered.
Presented by Medica, 3 times daily during the games.
This is awesome.
Exclusively on 1500 ESPN.
You're listening to Cover Your Assets with Todd Rooker.
Very good. Wrapping up the last portion of the show here. We've been here with Mike Overson talking about positioning for future financing. When you're dealing with people, as I do every day, who are in the midst of seeking counsel from me as to what they should do, maybe it's a strategic default, maybe they want to know the implications, the length of time to recover, if they have gone through things like short sales, bankruptcies, foreclosures. My job is to be the expert in all areas and consider all of these things. So when you listen to me interview these folks, and if it seems like I kind of know a little bit about their businesses, I need to, because when you ask me, you know, how long will it take me to improve my credit? What you're really asking is how long until I can get a loan. So my job is to know, as soon as you go through your financial storm, how do you immediately, and I mean the day after, begin to position yourself for future financing? And for a lot of people, their answer is, well, we're going to stop using credit because obviously that's what got us in trouble in the first place. We're going to pay all our bills on time, and in no time we'll be right back in shape. Well, that is such a load of nonsense. The reality is that you have to have ongoing active trade lines, and one of the best tools at your disposal is credit cards. And the idea that somebody after a bankruptcy should go and get credit cards right afterwards, the day after. Picture your child, your grandchild, your friend, your client, and you're the person with solid credit, and you tell them the day after their bankruptcy has been discharged, they should go out and get about 3 credit cards. They would think you were nuts, and you probably would feel ridiculous saying that. Let me tell you what, it is exactly what they need to do. They need to reestablish credit as quickly as they can and have as many reporting trade lines as they possibly can. But if you don't teach them fundamentally how to manage their money and ensure that those very trade lines that must be there to rebuild credit are managed perfectly, I mean flawlessly, not one late, can't be going over the ratios. You need to know you go over 20% as a ratio on your credit card, you're already diminishing your credit score. And that doesn't matter if you're paying your bills on time. Other things to know is, remember, it's the average balance over a 30-day reporting period. So if I take a credit card that's got $1,000 of available credit and I bring that sucker up to $900, but at the end of the month I pay it off in full, your average balance throughout that 30-day reporting period was over 20%, and it actually could be diminishing your credit score. There is so much to know. I could go on and on about this stuff. So do people know this stuff? They don't have a clue. So, when you're talking to somebody who's in finance, when you're talking to somebody who's in real estate, having enough insight as to what makes their business work and the things that they go through allows you to position yourself to have the best shot at getting a loan done. But it's varied, and in every situation, you're going to be dealing with different parameters. However, there are broad brushes that you can look at and say, how do I make myself more attractive to a financial institution? My job is to have a person within 2 to 3 years from the time of a foreclosure, bankruptcy, be able to put them in a position where they can qualify for financing. And although they'll tell me, I don't care if I ever own a home again. You know what? I just lost this home. I went through a nightmare. I got divorced. Let me tell you what, when 3 years elapses, you won't feel that way anymore, and you sure won't want to be told it's going to take you 3 more years to get there. So, appreciate you listening. This is Cover Your Assets. Happy to be in your homes every day. Go to the Financial Crisis Bible, www.financialcrisisbible.com, or go to our website, cya21.com. Looking forward to talking with you all next week and bringing you more valuable information on Cover Your Assets. Bye-bye.